Edward Brown, host of The Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be Jason Mandel. You're not going to want to miss this show. That's The Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And today's trivia theme is the NBA. We haven't had NBA basketball questions for a while, so figured, okay, that ought to be kind of fun. All right. And today we do have a special guest, Bryan Stockwell of DYF Investing. Bryan, welcome to The Best of Investing.
Well, thank you. Thank you. Glad to be here.
All right. And let's see. Let's get right into it. So you have, you're drawing from your extensive IT background to create a powerful tool that identifies value opportunities in the market. Can you get into that a little bit, please?
Yeah, absolutely. The core of the tool is it's really about value investing. There's 2 real tenets to value investing as far as, trying to simplify it, finding really good companies at a discounted rate. And so the tool really is geared to doing just that. I try to find really good companies, and then we are able to evaluate those companies, finding their intrinsic value in order to determine what if they're on sale or not. So the tool is really geared to screen those companies and provide users with really good opportunities.
And the value investing as compared to technical would be more of like looking at charts to see how well a stock is performing compared to, I know I've learned a little bit about charts over the years, inverted head and shoulders and flags and all that kind of fun stuff. But that's the technical aspect of it. You're talking about the fundamentals, right?
Yeah. So I actually started doing technicals when I first started this. I was very much into it. I'm being in IT, I'm kind of a geek. So I love numbers, I love spreadsheets. And I really got into a lot of the technical analysis, and momentum trading. That's really what that comes down to. The problem was that there's, that's really short term, and it was really hard it creates a lot of anxiety. So I really like the fundamental aspects.
Yeah, it's funny with regard to the charts and all that. It was harder to predict going forward, but you could look back and say, "Oh, this is why this one performed this way."
Exactly. Yep.
Because you're expecting something, and then when suddenly it turns and it goes, "Wait a minute, that's almost exactly opposite of what we thought."
Right.
Tell us what kind of factors drive stock prices?
Well, so I think initially, it's all about what Warren Buffett said this. He says, in the short term, the stock market is a voting machine. In long term, it's a weighing machine. I believe that in the short term, emotions drive the stock market. I think in the long term, though, I think the underlying values and intrinsic, the baseline numbers really kind of drive the prices.
And so you keep the emotions out of it, right?
Yeah, exactly. That's the goal.
Yeah, because I could see there are a lot of people, they seem to always sell at the wrong time, right after the stock has dropped so much.
Right. Well, value investing in its essence is contrarian. So it's like we like when things go down.
Yeah. It's interesting. I do a lot in the real estate loan market, and we're buying in our fund, in one of our funds, the one that I manage, the Southwest Fund, we're buying a fair amount in New York. And, people are, oh, no, not New York, with all the craziness that's going on. But the prices have dropped, not so much in the real estate, but in the loans. So we're able to pick up some pretty good loan to value loans. So I get what you're saying. But yeah, it's like people want to stay out of that side of the market. So that's where you go in.
Right. Exactly.
Good point. Okay, we've got about another minute or so. When we come back, certain things we want to go over: passive versus active investing, how mutual funds rip off retail investors, how to use data to find buying opportunities. There's going to be a lot of good stuff. Yeah, you sent me a lot of good information here to share with the public. And before we cut out to our break, though, What is your position? Are you an RIA or what?
No, actually, I'm just an enthusiast. My background's
Okay.
IT, so this is we're not giving any advice at all. This is purely
Okay.
just a tool for people to use. So
All right. But do you hire yourself out to potential clients?
no, no, not yet,
No.
not yet.
Okay. Okay. So this is great. This is just kind of a sort of a fun show to kind of give the audience information.
Yeah, exactly, exactly.
I like that. Okay, that works. All right. Let's see here. I do want to make a mention for Polio Restaurant in San Francisco. It's right in downtown San Francisco. I've eaten there a couple of times. It is phenomenal. There's a reason why San Franciscans have voted it consistently high on the scale of restaurants that are in San Francisco. So check them out. Polio Restaurant, Palio. And our first trivia question here, we're talking the NBA players. So which player, and again, just a reminder, Brian, if you know the answer, don't say anything yet till we come back from break. But here's our trivia question. Which player attempted a record number of free throws, 39 of them, by the way, in an NBA postseason game? Call 888-912-1190. The first caller with the correct answer wins that tanning certificate, which, by the way, is worth a little over $100. Which player, NBA player, attempted a record number of free throws, 39 of them? That's a lot of free throws in an NBA postseason game. All right. Also want to make a mention here for Integrity Electric. Call them to check out what a Tesla Powerwall can do for you. That's integrityelectric.net. All right. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We are going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with my special guest, Bryan Stockwell. And our first trivia question, which NBA player attempted a record number of free throws, 39 of them, in an NBA postseason game? Bryan, any idea?
Not a clue, not a clue. The only ones
Okay.
I know about maybe the Suns, Kevin something. I can't remember his name, but I know he had a lot of free
No.
throws in the '90s.
Okay. No, it was Shaquille O'Neal. And
Ah,
if you remember back in those days, he was not a very good free throw shooter. So the old hack-a-shack, where
right.
they just figured, better to just put him on the line. So we are in the Zoom studio here with Bryan Stockwell of DYF Investing, which, by the way, Bryan, what does that stand for?
It stands for Ditch Your Fund Investing.
Ditch your fund. Okay. Now,
Yes.
we told the audience that you were not, on the show, not giving any advice per se and not actually selling anything, but you do have a website that you want to share with everyone in case they want to check you out.
Yeah, yeah. That's it's dyfinvesting.com, and basically that's the tool that I use personally that I'm trying to share with other people.
Okay. Like when people go onto your website, what does it cost to use your tools?
Right now we have like monthly annual subscriptions. It's around $17 a month or
Okay.
so. That's just kind of starting. We're also looking to have a free option in the future for people to try. There's also a 7-day free trial as well. So people just want to try before they buy. That's absolutely an option as well.
So when they go onto your website, they learn various tools like how to look at the value for various stocks in order to buy. Is that the
Well,
idea?
that's one part of it. Yeah. So
Okay.
as I mentioned before, there's two parts to it. It's really about finding really good companies. So we have something called the DYF score that we basically rank companies based upon their past performance. And then on top of that, we also provide intrinsic value calculations. So we use things like DCF and other valuation methodologies to determine the intrinsic value of a company.
Cool. All right. Yeah, I mean, my background is accounting, so of course, I've been, looking at value investing a long time ago.
Right.
Uh, Now, give us. Did we talk yet about what factors drive stock prices?
I think we did. Yeah. I
We
said
did. We did
emotion
talk
and
about that.
yeah.
Okay.
Yeah.
Emotion. Yeah, that's right. Okay. So, give us like the passive versus active investing.
Well, I think active investing was somebody who I think it's more like trading. Somebody who basically
Mhm.
just goes in there to they're more interested in making money off of the stock itself where I think passive, in my opinion, is more about investing in a company and really, understanding a company and really investing in that company, and you're buying it long term. So you're not very active on it. Ultimately, the way I promote doing this is you basically rebalance your stock portfolio basically once a year.
Okay. But you're still only making money either off the dividends or the growth of the stock, right?
Absolutely. Yeah. Well, I mean, there's
Okay.
other ways to do it too, but these are a little more complex. You can get into selling call options and things like
Oh,
that.
options. Yeah.
Yeah.
Yeah, I remember I shared on the show before. I was in the early '80s. I was making a good amount of money. Of course, interest rates were high back then, but I owned a stock and I kept selling a short-term call option, and that was doing well until the company didn't do well and I got smoked. But excuse me. So talk about how mutual funds rip off retail investors.
Well, I don't know about ripping off. I don't think it's like that per se, but I do think though that I don't think you can. I think you can do a lot better in general just by buying an index fund. Um,
Okay, fair enough.
the statistics really kind of lay it out. I think the last thing I heard was 96% of all mutual funds do not meet the market, do not beat the market. So
Yeah.
you're literally talking about having fees on top of an instrument that's really not even doing as well as an index fund would.
Yeah, because and primarily, I mean, there, as I can see it, and tell me if I'm wrong, the main issues are one, the fees are so much lower in an index fund because they don't have to necessarily be managed, and you're not typically buy the manager's not really buying and trading because all he is just buying whatever the index is, right?
Yeah, exactly, exactly. So index, they just typically have a much lower fee rate.
Yeah, I mean, I've seen it, as little as what, like 15 basis points.
Yeah, yeah,
Yeah,
yeah.
yeah. Are there any ones that you like more than others?
Index funds, I'm
Yeah.
an S&P guy. That's what I base everything off of.
Okay.
I think that probably does the best out of all of them. I mean, you have Nasdaq, but that's usually more when I think that was really big in like early 2000s. That was doing really well with the tech
Oh
booms.
yeah, yeah, yeah.
Yeah.
.com to .bomb. But then,
Right, right.
does if you're going to do an index fund, how do you choose between which company you should use?
You mean who the brokerage should be?
Yeah, I mean, like Vanguard, Fidelity, Franklin. I mean, there's a whole bunch of different S&P funds out there, aren't there?
Yeah,
I
but
mean,
they're all pretty much they all pretty much have low fees because of their
yeah,
nature. I would just try to find the one with the lowest fees because ultimately they're just trying to emulate the S&P, and so
yeah.
your returns are going to be comparable.
Yeah, and it can't be exact because they always have to keep some money in cash. And if if there are so large redemptions, you're going to get those. They're just going to have to they're going to have to sell if
Right,
they don't have
right.
enough cash on hand. So yeah, it cannot mimic exactly the S&P all the time.
That's true.
Um, okay, and how do you use data to find buying? Actually, you know what? I've just realized we got to cut to our next commercial break here. All right, here's our trivia question. The first NBA player to win both the MVP and Rookie of the Year titles in the same season. Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Again, the first NBA player to win both the MVP and Rookie of the Year titles in the same season. All right, don't touch that dial. The Best of Investing will be right back with Edward Brown, me, and Bryan Stockwell, our guest. Welcome back to the Best of Investing. Edward Brown here, along with Bryan Stockwell. Our second trivia question. The first NBA player to win both the MVP and Rookie of the Year titles in the same season. Bryan, do you know that one?
Rookie of the year, geez,
You have to go back
LeBron?
in time.
No,
What's
no,
that?
I said LeBron.
LeBron? No, actually, you have to go all the way back to Wilt Chamberlain.
Holy cow! Holy
Yeah,
cow!
he was well because he was the first. I mean, probably the last one to do it was LeBron or Kobe or somebody
Right,
like
right,
that.
right.
Want to make a mention here also for the Tahoe Lakeshore Lodge. Actually, boy, I tell you, we've had some Sierra storms here recently, but I bet now that the weather's clearing up, the Tahoe Lakeshore Lodge, love to have you. 200 feet of beachfront, and they're not too far from the ski resorts. So check them out, TahoeLakeshoreLodge.com. All right, so we are in the studio here with Bryan Stockwell of DYF, which stands for Ditch Your Fund Investing. So, Bryan, how do you use data to find buying opportunities?
Well, primarily we have 13 different metrics we look at. That's for our score. So the metrics really encompass looking at growth for a company. We look at EPS, we look at earnings, revenue, we look at cash flow, and we also look at equity, making sure that a company is increasing value year over year. We also look at debt, their
Okay.
debt ratios, and finally we look at how their management's doing, which like with ROIC, ROE, things like that. And so we take all those numbers, we take 8 years worth of data, and we compile that data, and we come up with a score for that company based upon the past.
Well, let me ask you, how often do you have to review it? Because, they might not have debt this quarter, but they might have debt next quarter.
That's quarterly. Yep, every quarter.
Every quarter. Okay.
Every quarter. Yep.
Can you, again, past results are no a guarantee of future results, but can you share any results with us in the last year or so?
Well, yeah, I just finished doing some back testing. Um, so we had if for the past, I went back to 2016, and if you had bought companies with a score of 70 or above, but that were 20% undervalued, our returns on average were around 27% per year.
Wow, that's
Yeah,
impressive.
yeah. I was actually pretty impressed.
Yeah. I'd be very impressed with that. Okay. Uh, let's see here. Where did you get the idea for DYF investing?
Well, actually, it started about 15 years ago. The company I was working at, we had kind of a small group of people that we kind of had a little investing club. And, we were getting pretty heavy into it, but we were just picking stocks. We didn't really have, I mean, we were a bunch of programmers there. So we really didn't, we were kind of like, gut and, instincts and, oh, hey, we just talk shop a lot.
Okay.
So I read a book by Phil Town called Rule One, and I really liked his approach. That kind of brought me into value investing. And he had basically a step-by-step approach to how to successfully invest. And I really liked that. So from there, I wrote a bunch of other books. Benjamin Graham. I read a bunch of things on Warren Buffett, and kind of went down this whole value investing path. And so I took a lot of that information from those books, and we kind of created an algorithm around it. The biggest problem, though, at the time is data was so expensive, we really couldn't do anything with it. So we had to kind of
Yeah.
put it on hold.
How do you how do you determine at what point you're going to sell the
Well, I
stock?
think that to me is exit strategies to me are one of the hardest things to figure
Yeah.
out because you hate leaving money on the table.
Yep.
But you have to have, there has to be a point where you said, you know what, I'm going to sell. So right now, if the score drops, basically if the company stops doing well, then that's an opportunity to sell. The other thing too is I want to take money off the table. If I'm over 50% overvalued on a company, that's an opportunity for me to sell as well. So
Yeah, I
that's
was
kind
gonna
of
say,
what I
'cause
look at it right
if your
now.
company's not doing well, aren't there usually some pretty sharp people who have already determined and they've already sold? You don't want to be chasing it all the time, right?
No, no, no. Yeah, exactly, exactly. But I mean,
Right.
the idea of the score really kind of drives. That's what I'm talking about with the score. Because if a company, for instance, say a company is, um, one of the things about the score, it looks for consistency. So if a company it's very erratic, and it's up and down, up and down, up and down,
Yeah.
that actually drops the score quite a bit. And there might be a bunch of FOMO, about people trying to get in, but that might be the right time to sell because the company in whole is like, say, they're acquiring
Yeah.
debt or something like that. That can be a problem.
Well, the retail investors always seem to be behind.
Yes,
Excuse
yes,
me.
yes.
And so, and what was your light bulb moment that pushed you to take this idea to reality?
Well, that was I actually got laid off my job, and so I'm like, you know what? I wanted to do this all the time, and I had an opportunity to. I found a data provider that was inexpensive enough that we could actually use. So
Hmm.
in 2019, I basically, because I'm being from software development, I just started coding it myself.
Very cool. Okay. Got a little bit of time here. Let's see. When we come back, I want to hear about what your most surprising successful stock is that you found from the data using your DYF investing. All right. Here is our third trivia question. Uh, this one is a multiple choice question. All right. Out of the following NBA players, which one did not win Rookie of the Year award? Larry Bird, Patrick Ewing, Magic Johnson, or David Robinson? Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Again, out of the following NBA players, which one did not win Rookie of the Year award? Larry Bird, Patrick Ewing, Magic Johnson, or David Robinson? All right, stay with us. You're listening to the Best of Investing. Don't touch that dial. We are going to be right back, and we're also going to cover what's going on at not only Pacific Private Money, but also Scottsdale Mortgage Investing. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Bryan Stockwell. And here's our third trivia question. Out of the following NBA players, which one did not win the Rookie of the Year award? Larry Bird, Patrick Ewing, Magic Johnson, or David Robinson? Bryan, what do you think?
I'm going to go with Patrick Ewing.
No, actually, he did win it. It was Magic Johnson. He did
Jeez.
not win Rookie of the Year award. All right. So now we were teasing the audience as to what we were going to cover this time. I did want to find out what was your most surprising or successful stock or security you found with the data from your DYF investing.
Well, so for me, a couple years back, I had a company come up on my radar. It was Sprouts Farmers Market.
Oh yeah.
Yeah, and I guess it was surprising for me because I didn't realize a company, a supermarket like that, grow as much as they did.
Yeah.
Literally in 2 years, I've basically over 100% gains on that company.
Okay. Yeah. They. I got to say that I love going to that store.
Yeah, and I love the store too. Yeah, absolutely.
Okay. Good. Um, yeah. No. It's actually one of my favorites here. Okay, so say I'm looking to find the next NVIDIA, which has gone just absolutely bonkers crazy. How can I use DYF investing?
Nvidia is actually an interesting story because Nvidia is more of a growth stock lately, and it's the tool itself. Well, one of the other interesting things is Nvidia is also a microchip manufacturer essentially, and they're very cyclical, so they tend to go up and down. So, like I mentioned before, um, the score really likes consistency, and Nvidia's have been up and down. So the score has
Yeah.
been a little lower, but the about 2 or 3 years actually in 2019 they were undervalued by 50%, and so you could have bought Nvidia at $40 a share then. I think they're at like 800 now. So if you're just strictly going off just intrinsic value, that would be a great buy at the time.
Now, do you do this only with stocks? I mean, it doesn't work with bonds. It doesn't work with crypto or that sort of thing.
No, because I don't. There's crypto. There's no financial
Yeah, there's no
underpinnings to
value.
that.
Yeah, exactly.
Yeah, I'm
Yeah,
looking for
yeah,
I'm looking for cash machines. That's what I'm looking for.
yeah. Do you look at like the dividends? I mean, that's usually a kind of a major part of the rate of return of stocks.
I actually
No.
don't count dividends in our rate of return, so that actually would add to it
Okay.
in some cases. Yeah,
Oh, okay. Because I've heard
yeah,
just over the long term that dividends are kind of a major part. Um, why don't you give out your information one more time, and then kind of move on to a little bit of what's going on at Scottsdale and also Pacific Private Money. Go ahead, Bryan.
absolutely. Yep, it's dyfinvesting.com, and like I said, um, we have a tool out there to help people just basically specifically, first time investors, really to help them get started and feel comfortable investing for the first time. So
Very cool. All right, going to move on here to what's going on at Scottsdale Mortgage Investments. So Scottsdale, they buy discounted mortgages from hedge funds, banks, etc. Sometimes they'll buy loans that are performing, and sometimes they'll buy ones that are underperforming or actually are non-performing, and then those are the ones they get the really smoking hot loans, really good deals. Then they work out the deal either with the borrower or they move to a foreclosure and they make a fairly handsome rate of return. So what they have is their trade desk. So investors can click on to their website, Scottsdale Mortgage Investments, and sign up to go onto the trade desk. And you don't need a tremendous amount of money. I mean, they have loans in there that are as little as, $10,000, $15,000, and also ones as high as, $1 million. So what you do is you sign up for the trade desk. They'll give you a non-disclosure agreement to sign, and then you can see basically everything that they have that's for sale. And some of these you can make some really, really smoking hot rate of return on it. So check them out, Scottsdale Mortgage Investments. And then over at Pacific Private Money, they originate mortgages, and there's their Freedom Fund, which is they actually lowered the rate. They lowered the minimum investment down to 100,000. It was 250. And they've increased the interest rate to 8%. And if you put more money in, then they'll pay you potentially 9 and even 10%. And then there's also the Southwest Fund. That's the fund that I manage, where we buy discounted mortgages. In fact, Scottsdale provides us a lot of the mortgages that we buy or we lend against. And we pay just a flat 8.5% to the clients. No one's ever lost any money. It's about a $9 million fund, so it's kind of a small fund. And the best part about it is the fact that it's extremely conservative, because the average loan to value is about 54%. But because we're involved in these loans at discounts, the average, what they call ITV, investment to value, is only about 37%. So it's extremely conservative. I don't know of any other funds out there that are this conservative that pay this high rate of return. So 8.5%, you can either take the monthly distribution or you can have it reinvested for a compounded yield. For more information, you go to Pacific Private Money and click on the Invest Now. Obviously, you don't have to, you're not locked into anything. It's just to get more information, to check out those funds. All right, stay with us. You are listening to The Best of Investing. Don't touch that dial. We are going to be back with some closing comments. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Bryan Stockwell of DYF Investing. Bryan, I'm going to come back to you. So do you need to be an expert investor to understand the data on DYF Investing?
No, I think we're actually geared for simplicity. That's what we're focused on. I think one of the other reasons why I wanted to create the site is because there's a lot of things out there right now that are basically just data dumps. And so there's just a ton of information on a screen. And if you're just, Joe six pack or whatever, you really don't understand everything's going on. So I wanted to make this accessible for the average person. And that's really what my goal is here. So by doing that, what I did is I created the score, which helps do a lot of the analysis for people. And then on top of that, the intrinsic value. So between the two, I feel like we're giving people a much better leg up on their opportunities and the chances of success.
Okay. All right. And then let's see here. People might be skeptical of how it works. What would you say to them?
Well, what I will say is I use it. My wife uses it. My mother-in-law uses it, and she's definitely not somebody I want to make unhappy.
Yeah.
So, and then I've been very transparent about everything we do. So we're going to post our back testing, things like that. And the one thing about it is big. So this is a long-term thing. But I'm happy to share my results with anybody. We have a phone number. If you call me, I'm happy to share that.
Go ahead. You can give that out.
What's that?
Go ahead. You can give that out.
I could, and if I had it with me, hold on. I gotta
Okay, that's okay. Give out your website. Maybe that's best.
Yeah. So the numbers on our website, which is dyfinvesting.com.
Very, very simple. And again, for information on Pacific Private Money Funds, go to pacificprivatemoney.com. Check out all the various funds they have. And then also for Scottsdale Mortgage Investments, just Google Scottsdale Mortgage Investments. You'll find them. They're also in Arizona as well as Bryan is, and ask to sign up for their trade desk and see what loans they have available. You should be able to make a decent rate of return. Excuse me, on that. So with that, let's see here. We have just a couple of minutes. Why don't you share if you have another success story to share with us?
Well, I think one of the biggest roller coasters I've had lately is Meta. But
Oh yeah.
yeah, so I think I had Meta kind of came on my radar a couple years back, but with all the congressional oversight issues and things like that, it kind of took a dump. And so I bought it in around 225, and it went down to almost $100 a share.
Wow.
So yeah, so I really had to have belief in the system, and obviously that's this turned out to be a good story.
Very cool. All right. Let's see here. Yeah, I just want to. I know we're kind of bouncing back and forth here. We have just another minute. So in our Southwest fund, it's amazing how when people owe money on their house, they got to make sure that it gets paid. They don't want to get foreclosed out on. So a lot of times we can just discuss with them, do a loan workout. Other times, people will complain, but then when push comes to shove, suddenly they come up with the money. So it's very, very interesting how we do very well in our Southwest fund. That's at Pacific Private Money. That's probably one of the reasons why we haven't had any losses, is that everybody needs a place to live, and we're getting these loans at pretty good discounts. All right, and if you're ready, Bryan, we're going to go to our thoughts for the day here. So I applied for a job yesterday, and they asked for 3 references. So I wrote down a dictionary, a thesaurus, and a map. I don't know why I didn't get the job. And did you know your pupils are the last part to stop working when you die? And the reason is because they dilate. Okay, now that one was funny. I don't know why I didn't get any response.
I was
Now,
waiting.
there
I
we
was
go.
waiting for the dump bump.
That up bumps. Yeah, okay. All right, audience, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions and, of course, more dad jokes. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.